It was bound to happen. After so many green weeks, we were supposed to get a red week. But why this week? I have no idea, but we're going to cover everything that happened this week. And of course, the biggest earthquake in the AI universe, Sora. We're going to talk about everything that happened this week, from headlines like Jeffrey Bezos selling almost $6 billion in the last month of Amazon stocks, through what's going on with super microcomputers and NVIDIA and other companies as well. Everything on our weekly summary. Are you ready for it? Let's go. Hello everyone and welcome back to the channel, and if you're new, welcome, and of course if you're a repeat viewer, thank you very much for your loyalty. I'm Micha Stocks, and on this channel we try to cover the stock market on a weekly summary, look at all the headlines, all the statistics that happened, looking at indices, at averages, everything you need to know to summarize the week and also look at the week ahead. If you're new, of course, you're more than welcome in subscribing to the channel and smashing that like button. Let's start with our major averages. Nasdaq with a red week, down 1.5%. S&P 500 down 0.4% on the week, and the Dow almost unch. Russell is the only average that ended up in the green, plus 1.16%. Looking at the indices themselves, energy, materials, and utilities on the green. On the flip side, we see technology pulling everything down 2.5%. We're going to see that with the Magnificent Seven, of course. Crypto market, still hot. Inflows to the ETFs. Bitcoin up 2.6%. Ether up 5%. And if we look at the energy market, you can see crude oil up 3.3%, while natural gas down 13%, which is 35% year to date. I'm recording this February 17th. In a month and a half, natural gas plummeted. The reason for that is pretty simple. It's not that cold. Not in Europe, not in the US, and the factories are basically creating more and more natural gas, liquefying it, and then shipping it all across the globe. When we look at our heat map, you can see on the left side, Microsoft, Google, Apple, Oracle, Adobe, all of them on the red side. Amazon also, Broadcom as well, and you can see NVIDIA, green, probably the biggest, one of the biggest companies that's still green. All the rest have become red. And also Amazon celebrated this week being the third biggest company in the S&P 500 by market cap. This brings us to the Magnificent Seven. Tesla, finally a green week, up 3.3%, mainly on Thursday and Friday. We don't know of any specific news. It might be that the reduction in price of Model Ys and others have stopped, but we don't really know. We probably will hear it next week. Meta up 1.1% and NVIDIA up 0.5%. On the flip side, we see Google pulling the technology down 5.6%. Of course, it's all related to OpenAI. Microsoft down, Apple down, and Amazon down as well. This brings us to the companies that reported last week. When you look at these companies, you ask yourself, okay, what did we learn? We learned that some of the companies are really operating in full steam ahead. They're hitting both top line and bottom line. But on the flip side, we see companies that are now struggling to create better forecasts, struggling on the revenue side and also struggling on the earnings side, like Twilio and others. But as I mentioned, there are companies that are outperforming, like AppLovin, like Shopify, like Robinhood, that presented a surprise revenue and earning to the market, and Lyft with a huge mistake. We're going to talk about that in a second. This brings us to something else that happened this week, which is the CPI. CPI came in hot this week on Tuesday, up 0.3%, which is an increase in inflation, as you can see, which means inflation is still here and it is sticky. When we look year over year, we can see that we're still coming down, mainly due to the fact that January, February were hot months, but that doesn't mean that March last year wasn't a low month, which means that we need to cool inflation in order for the Fed to reduce rates. But here comes the problem, or actually two problems. One, the first problem is what is increasing the inflation read right now is mainly shelter. Shelter is with a big portion of the CPI calculation, and it's, of course, going up every month for the last year. That's problem number one. Problem number two is not even related to the CPI, the PC, the PPI, any measurement you would want. It's a fact that November 5th, we're going to have elections in the US. Now, if the Fed wants to reduce rate, they will need to do it whether on March or May. They don't have a lot of time. If they wait reducing rate, and I'm putting aside right now inflation, putting aside if a bank would cease to exist or something like that, everyone would blame them for being politically biased. Everyone would say, oh, you're reducing rates because you want this president to win, this candidate to win, or this candidate to win. So when you look at this in an objective way, the Fed is kind of in a pickle. They will have to reduce rates, whether March, whether May. Otherwise, it's not going to happen this year because they're going into the final stretch of the election, and then everyone would blame them for not being objective. So that's also very interesting to put in context. When we look at a PPI also came hot. This is the producer price index. If the CPI is a consumer, PPI is the producer price index. That also came hot, hotter than expected. When we look at Jeff Bezos sold another $2 billion this week, which means he sold $6 billion of stock this month. Why, we don't know. The amount is crazy. Maybe he knows something. Maybe he just needs the cash. I have no idea, but $6 billion is a lot of money and a lot of stock. NVIDIA keeps taking the analysts by surprise. They keep raising the price target. The last one this week was Loop Capital, giving NVIDIA another 65% run from here to a $1,200 price target. When it was $500, we talked about $1,000. It looked crazy. Now it's already $1,200. Take that and talk about Supermicro computers, which went up only this year 90%. This year. February 90%. In 3 months, 250%. It's just going up. Of course, Friday, this run-up stopped and the stock went down about a 20% down day. And I assume we're going to see some more down days up ahead. So that's Supermicro computer. The AI bubble is not close to being a bubble yet or as big as the dot-com bubble, but it's starting to be inflated in there. But when you call it a bubble, there shouldn't be any competition. There shouldn't be any money behind it. There shouldn't be anything because it's a bubble. But in this case, that's not the case. OpenAI reportedly working on a web search service to compete with Google. So is Google a monopoly? Will OpenAI break that monopoly? I don't know. But what I do know that it's starting to hurt Google's stock. And that's not the only thing. OpenAI also introduced Sora this week. Sora is their video from text generated. Basically, you take a text prompt and you write, in this case, a stylish woman walks down a Tokyo street filled with warm glowing neon and animated city signage. She wears black leather jacket, a long red dress, black boots, and carries a black purse. She wears sunglasses, red lipsticks. She walks confidently and casually. The street is damp and reflective, creating a mirror effect of the countless lights many pedestrians walk about. You write this, you click enter, and you get this video. 59 seconds of exactly what you were looking for. There was no real model here. This is not really filmed in Tokyo. This is video. This is AI generated by OpenAI. This is not publicly available to everyone yet, only to the developers. But as you can see here, this is a huge earthquake that is going to change industries from side to side. And yes, Adobe stock fell Friday due to this. Yes, Google fell during the week due to this and a lot of other things. So if everyone wants to hop on the AI train, they will need to compete with this mammoth called OpenAI. And to anyone that wants to write the comment asking what is their ticker, they are not publicly traded. They're privately traded with a current valuation of around $80 billion. This brings us to the US GDP. Economy is strong. GDP up 2.9%. It's lower than it was a few weeks ago, but it's still very high, 2.9%. And if you're looking for a recession, you need at least 2 quarters of negative GDP. We're not even close to the negative point? Maybe will be eventually. Who knows? Microsoft is planning to invest $3.2 billion in creating infrastructure in Germany for AI. Inflows to Bitcoin ETF keep coming in. BlackRock, Fidelity, ARK, and Bitwise altogether have over $1 billion in assets. Now, they might be wrong. Maybe Bitcoin isn't worth anything. But what I do know is when I think of wisdom of crowd and wisdom of investors, whether you believe there is wisdom or there isn't, a flow like this has never been seen in a new ETF creation, which means that a lot of people want exposure to crypto. They're right, they're wrong, only time will tell. But this is very bullish for Bitcoin. Something not so bullish for the smaller banks in the US, what we call regional banks. You can see that their exposure to the commercial property is higher than the bigger banks. As big as you go, the smaller you're exposed to commercial property. And that's part of the reason why everyone's afraid of another problem with the commercial banks. And here's Zuckerberg doing something that CEOs usually don't do. He took the Vision Pro, Apple Vision Pro. He tested it. He compared it to Quest. And he came out with a video, posted it on his Instagram account, saying what he thinks about that. Now, I wouldn't expect him to say that Vision Pro is better than his product, given that he still stood or sat down in front of a camera and talked to his viewers, talked to his customers without being ashamed and without trying to say, oh, I tested, but not mentioning the name. No, he said he said the name, he talked directly about it. And I think that is very, very, very endearing, at least in my heart. It doesn't mean that I'm returning my Apple Vision Pro, of course, but I'm just saying that I think that's a very smart thing to do from his perspective. And this is David Risher, who is the Lyft CEO. Lyft had an issue in their earnings report. They reported earnings margin or some kind of margins, and they flipped another zeros there. Instead of 50 basis points, it came out to be 500 basis points. The stock went up almost 50%. Of course, when they caught on to it a few minutes later, they sent out an update and updated the SEC. But of course, the stock first of all went up and only then corrected. And he came a day after, of course, to all the media outlets and said, look, on me, my mistake, let's continue on. The team did a lot of great work. And that is Lyft CEO taking responsibility. Michael Berry not taking any responsibility, still bearish, still going against everything, and again, still being on the wrong side. He closed his short position against the semiconductors after he tried to short them, and of course, burnt his shorts while in the process. Delta gave $1.4 billion as a Valentine gift to their employees, almost 10% of average employee salary as a bonus. They took their cash flow pile and gave it back. There's a big question, of course, about that amount. Not about the amount, but about the action, mainly due to the fact that the U.S. government saved airlines. Why are they spending the money that was saved and not returning it back to the U.S. government? That's a different discussion. But again, if you're a Delta employee, kudos for the 10% bonus. Peter Thiel, Founders Fund, bought $100 million worth of Bitcoin. Where have you heard this name? He was part of PayPal He was part of the founders of PayPal. He was part of the founders of Palantir. And now he's Founders Fund. He was the person on Tuesday or Wednesday, almost a year ago, that called all his companies under the Founders Fund and told them, pull your money from Silicon Valley Bank. Some are saying that he's the one that created the run at the bank for Silicon Valley Bank, and we know how that ended. The bank closed 24 hours later because everyone took their money out. That's Peter Thiel. And last but not least, Super Bowl 58 was the most viewed television show ever. 123 million viewers. Unfortunately, this got spoiled when Kansas City Chiefs went back to Kansas in the parade, and there was shooting there and people died and lost their life. Those were the headlines for the week. Let's talk about next week, and we, as usual, start with earnings. We have Monday off. Monday is President's Day, so there's no trading on Monday. Walmart, Home Depot is reporting it's mainly a retail week. So Walmart, Home Depot. Tuesday afternoon, we'll get Palo Alto, SolarEdge, Teladoc, and others. Wednesday, we're getting Wix and mainly NVIDIA. The whole bull thesis for the market is going to happen Wednesday with NVIDIA, Rivian, Etsy, and others. Thursday, we're going to get Moderna, Newmont, Nikola, and Cheniere. And Thursday, we're getting Square, Block, which is Block, Carvana, Mercado Libre, and you and others. Warner Brothers Discovery is reporting on Friday. This brings us to the events this week. The main event this week happens Wednesday afternoon when the Fed is releasing their Fed minutes from their last meeting. Of course, everyone would be looking for the discussions around rate decreases and everything around that. We'll see what is going to happen there. And this is the S&P 500 as we usually end this week. Look at the weekly candles. Every candle here presents how the week ended, whether it's a green week, meaning the week was an up week, or a red week, meaning the week was a down week. As you can see, S&P 500, after a few weeks of green weeks, went down to a red week. This brings us to this week when we're a bit stretched and a correction might be worthy around here. But I do want to stop and show you something very interesting. What you see here is the periodic yearly return on the S&P 500, meaning every year, what was the percentage of return that the S&P ended the year with? As you can see, you can keep being afraid of being in the stock market or investing in the S&P 500, but math is not on your side. It doesn't mean that future events would be like the past events. It does not mean that we are going to see always green years, and it doesn't mean that 2024 is going to be a green year. But what it does show is that looking historically at these numbers, if you're betting against the S&P 500, you're basically betting against history, math, and repetition. And this is a great lesson to everyone that is afraid of the stock market, looking at these numbers, saying, if every year, even if we have those red years, if every year we keep dollar cost averaging at least, and again, this is not financial advice, only educational and entertainment purposes only, at least you can see your money grow more and more. That's everything I had for you this week. We're going to be here next week. Same time, same place, weekly summary. If you enjoyed, you can smash that like button if you forgot to. And if not, I'll see you next week. Till next time, bye-bye.